Hello and welcome to this IBP for Finance series of videos from GitaCloud. This part 2 is aimed at finance and IBP practitioners. Integrated Business Planning IBP starts with integrated. It's not a process just for supply chain or operations. It needs to enable performance planning and management for the entire business, which means finance needs to be a core stakeholder of the IBP process. This goes well beyond simple monetization of units-based demand or supply plans. We will show you how to integrate financial planning and operational planning processes together in a single unified planning model within SAP IBP. Finance teams can now generate financial statements such as P&L, cash flows, and balance sheet based on detailed plans from operations and conduct powerful end-to-end what-if simulations. We provided this view of the budget components and corresponding financial statements in part 1 of this video series. We covered sales, production, direct materials, and direct labor budgets in part 1. Here, in this part 2, we will cover manufacturing overhead, SG&A, CapEx budgets, as well as the 3 financial statements: income statement, balance sheet, and cash flow. The manufacturing overhead budget is an estimate of all production costs, other than direct materials and direct labor, necessary to achieve the desired level of production in the production budget. Overhead costs are of 2 types, variable and fixed. Total variable overhead costs change with changes in production and are calculated by multiplying units to be produced by the cost per unit. Fixed costs generally do not change with changes in production and therefore remain the same each quarter. You can refer to the calculation explanation on the right to see how variable and fixed overhead costs have been calculated in SAP IBP. Manufacturing overhead per unit cost for 2022 is calculated by dividing the total overhead costs with total FG units to be produced. This comes to $1.20. Depreciation is removed from total overhead costs to get the actual cash payment for overhead, as depreciation is not a cash transaction. This information is needed for the budgeted cash flow statement. Selling, general and administrative SG&A costs cover all the other costs that are not directly related to producing finished goods. It is possible to have a variable SG&A cost, for example, sales commissions, which are linked to sales revenue, but this example assumes only fixed costs. We also assume SG&A equipment, such as IT data center hardware, and consider the impact of depreciation to calculate actual SG&A cash payments. We can have capital expenditure CapEx related to both SG&A and manufacturing assets. This budget can have a significant impact on cash flow and requires careful planning and analysis. We plan to acquire new assets at the end of 2022. Depreciation will begin in 2023 for these new assets, hence these acquisitions will have no effect on depreciation expense in Q4 2022. Now that we have covered the budget components, let's focus on the 3 main financial statements. We start with the income statement or the profit and loss P&L statement. We use the accrual basis of accounting. Revenue are recorded when earned and expenses are recorded when incurred. FG unit cost for 2022 is $4.50, which is made up of $2 direct material cost, $1.30 of direct labor cost, and $1.20 manufacturing overhead costs. We will apply this as the cost standard to calculate cost of goods sold COGS per quarter. Gross margin is derived by subtracting COGS from sales revenue. Net income or net margin is derived by subtracting SG&A costs from the gross margin. Budgeted income statement provides visibility into revenue, but not when cash will be received from sales. Cash flow statement looks to understand all the cash inflows and outflows, cash collection from sales, cash payments for purchases, and other cash collections or payments. IBP can be set up to convert revenue to accounts receivable based on customer-specific payment terms. However, to keep things simple, we will proceed with the model that 60% of the revenue in a quarter is received as cash within the same quarter, while the remaining 40% is received in the next quarter. We have a similar assumption for cash payments to suppliers. Assume that we only pay 70% of RM purchases in the same quarter, while 30% is paid in the next quarter. See calculation explanation on the right. We can now subtract total cash payments from total cash collected in each quarter to calculate net cash receipts. We now add net cash receipts to the beginning cash balance to calculate the ending cash balance. Budgeted balance sheet is an estimate of the ending balances for all balance sheet accounts. It helps understand the impact that budgeted sales and costs will have on the financial health of the organization. Accounts receivable for 2022 is the 40% amount for Q4 sales that we will realize in Q1 2023. Accounts payable for 2022 is similarly the 30% amount for Q4 purchases that we will pay in Q1 2023. Refer to the calculation on the right to see total assets and liabilities. We add net income for 2022 from the income statement to retained earnings of 2021 to calculate retained earnings at the end of 2022. We showcased an integrated approach to planning by joining the financial planning processes, with the operational planning processes embedded in SAP IBP. This unified model approach enables integrated what-if simulations and risk analysis of the business across operations and finance teams. See Part 3 of this series to understand how to perform variance analysis within SAP IBP in terms of 2022 budget versus actuals. Such variances can range from purchase price variances to actual labor cost variances and more. You can find more such explainer videos at GitaCloud website or GitaCloud YouTube channel. Hope you enjoyed this video. Please like and share if you did. You can also subscribe to GitaCloud YouTube channel. Thanks for watching. Have a great week.